We have seen the record run continue for stock markets. We have seen both the Nifty and the Sensex hit a fresh record high, with the Sensex even soaring past 1,000 points. And remember, yesterday, after the Fed's decision to cut rates by 50 basis points, we saw both the Nifty and Sensex hit a record high. But today, essentially, we've seen an extension really of this rally. And of course, to decode why is this rally, at the moment taking place, is it just global cues, or are we foreseeing something as far as domestic cues are concerned as well? Well, we have Anant Ladha. He is founder of Invest Aaj for Kal. He's also a mutual fund distributor. Thank you so much for your time. First, really, what's driving this rally and the extension really of this rally? Is it just global cues and global optimism at large, or are we foreseeing more FI buying? Are we foreseeing something else for the domestic market at large as well?
Hi, firstly, thank you so much for having me. I feel it's a combination of both FIS flows plus domestic positive surprise. We saw a 50 bips rate cut, which was kind of expected, but we have seen in past that Fed randomly changes their decision at the last moment. But if you remember, I feel we did a show around 3 months back where I discussed in detail that whenever there are elections, always Fed find one or the other reason and cuts rates randomly just before the election. It has happened yet again, and since history is repeating itself, what we have usually seen is whenever there is an interest rate cut, immediately we see a market pushing up, because since interest rate has reduced, first reaction is now money will move from debt to equity. But what is the second reaction? Second reaction is market realizes that uh, whatever positive news was there, it is finally digested. And usually on such days, we see profit booking either on the same day. For example, we might see some profit booking either today. This is what I personally feel. This is what past has taught me. Or we can see it maybe in a day or two, maybe on Monday. This is the usual trend which has happened in history. So fingers crossed. I hope this time it's different. But usually we expect things to be different each time. But majority time in markets, history repeats itself. That is why we see that technical analysis work in market. So yeah, that is my take on this complete scenario. It is mainly because of international markets, but be ready for some kind of profit booking is what I would say to all the traders, especially.
Okay, that's your message to traders at large. But if I were to ask you, for those tracking the markets very, very closely in the near term and in the long term, what are the sectors that they should look at?
I feel if you're investing in India, firstly, we will be guided by international clues, because right now we don't have any major trigger in next few months, but we have major US election happening in November. So yes, we'll be guided by international markets. But looking at domestic scenarios, looking at domestic flows, looking at uh, sector allocation by the government, I feel anything which is related to construction, anything which is related to development of India, consumption, tend and should do well in coming years. Plus, anything which is to do with stock markets, for example, if there's a stock broking company, or if there is something related to stock market which is listed on exchange, that is somewhere I still find we still have some space out there, and that might be an interesting space to look out.
Right. So that's as far as the near term and the long term picture is concerned. But for those saying, okay, what is your cautionary note then to investors at large? You have mentioned traders, but for long term investors, what would you say is your word of caution really coming in?
My very important advice is, recently I've seen that everyone is looking and going after sector funds. It is okay to go and invest in sectors, but make sure that you are not investing just because of past one returns. In last 1 year, we saw that huge returns have been delivered by sectors like defense, but we have to be cautious in those sectors. Usually, sector calls we take in those sectors which is underperforming, maybe for last 3 4 years, 5 years. So don't just look at past 1 year return and randomly invest in sectors. Be sensible. If you are over allocated because small cap and mid cap has rallied a lot, probably you can book some profit and move to large caps and be invested in India's long term journey. Presently, if we look at the market capitalization of top 10 stocks of India, they are at lowest, which means that small cap and mid cap has rallied a lot. So we have to maintain our risk profile and do justice to the market situations.
All right. Thank you so much for sharing your thoughts. And of course, for all our viewers and investors who are watching this, we will continue to track the markets going forward.